Hi, Brian Turner here with another video mortgage installment. Today we're going to go over the 15-year mortgage. I get asked this question probably at least once a month. I have a customer that asks me, Brian, should I consider doing a 15-year over a 30? Here's the four critical questions that I think you really need to ask yourself before you decide to get a 15-year mortgage. So without any further ado, let's get right into it. Number one, how much money will I save on my interest rate? That's what you need to ask yourself. You know, it's a fact. A 15-year mortgage will provide you with a lower interest rate and overall lower interest payments. However, the thing to really consider is you're going to have a larger monthly payment. While the 15-year will definitely, you're going to probably get a half a point lower interest rate, and over the life of the loan, you'll save a tremendous amount of money. But you know, on like a $200,000 or $300,000 loan, you're going to be paying another, $400 or $500 each month. So you want to ask, really what you need to do if you want to weigh the options is ask your mortgage lender to give you a breakdown. They're going to be able to give you the differences in the interest rates between a 15-year and a 30-year. They're also going to be able to tell you the differences in the monthly payment, so you'll know how much more of a, nut you got to crack each month. And then over the life of the loan, they can tell you how much money you'll save, so you can decide, well, is this really worth it? And, I can tell you it's a huge difference that you'll pay between a 15-year and a 30-year. But you got to, make sure you're going to be able to swing the extra money each month. So, number one, how much interest am I going to save? And your mortgage lender should be able to tell you that. Number two, should I do a 30-year mortgage and just make extra payments? A 30-year mortgage, the thing about a 15-year mortgage, is it'll lock you into a set payment. And it's going to be, like I said, that $300 or $400 a month higher than what you're looking at now. So, and there's no changes. So, what a lot of people do is they'll go with the 30-year, which will give you a lower minimum payment. And then they think, well, I'll just pay the extra money each month. And the truth is that will decrease the number of years that you pay on your mortgage. It'll knock it down. But what you got to think about is this: are you self-disciplined enough to actually do it? And I can't answer that question. No mortgage person will be able to. You really got to look yourself in the mirror and decide, am I the type of person that's going to do it? Or do I need to set up that 15 years so I don't have a choice? And another thing to just consider is if you go for that 30-year instead of the 15, it's nice to have the flexibility. Don't get me wrong. If you have a car repair or something that comes up, you can just make the minimum 30-year payment each 1 month, and it frees up a few $100 to get your car fixed. So there is that side. However, you're going to be paying a half a point higher interest rate while you owe the money. So just, keep that in mind. You're going to have a higher interest rate, and just give it some thought. Look yourself in the mirror, like I said, and decide if you think you can swing the 30 and just make extra payments. The third thing is to ask yourself is how long do you want a mortgage? A 15-year will eliminate the obligation sooner. You'll be done much, much sooner. And it gives you more time to enjoy things like retirement, and that kind of thing. And you just need to ask yourself, where am I at? How old am I now? How much longer do I intend to work? How much longer do I want a house payment? So, and these are really questions that only you're going to be able to answer, but you should give it some thought. And one other thing to think about is, the tax implications. You get a great tax write-off for having a mortgage. And so if you do a 15, you're not going to get as good of a tax write-off because you're paying less interest, and you'll be done much sooner. So I would suggest if you're concerned, if that tax write-off is a big deal as a part of your yearly income and that kind of thing, talk to your tax person and just kind of get their take on it before you make your final decision. Number four, should I use my home as my primary investment? If you get a 15-year mortgage, well, if you get any mortgage, but if you get a 15-year, you're investing in real estate. And having that higher payment means you're perhaps leaving less money for other investments. Like you might want to, have more money for your retirement plan that might grow at a higher percentage. And, you just need to think about that. Think about how diversified you want your portfolio to be. And, if you're me, I tend to think as long, real estate's a great investment. Even after the last couple years that we've had here, they're not making any more land. And as long as there's more and more people, real estate's going to become more and more valuable. We might have little periods where things kind of ebb and flow and things I think really it's not that real estate became less valuable over the last couple of years, it's that it became overvalued in the years preceding that. So in my opinion, it's a good thing, but you need to decide what your opinion is, and you really need to think about these points. So that's the last question. How much of an investment do I want to make in my house as opposed to other things that I could be putting that extra monthly payment to? So anyway, that's the 4 critical questions. I hope you found this video helpful, and I'd love to hear feedback. So that's it, and I hope you're having a great day. Goodbye.